Gold bugs, GLD, gold ETF. That's what it is. It's a spider gold trust, okay? And the thing about it is, what we want to show you is that this is a 60-minute chart. And you can see the closing bell here on 12/9, that the close was 166.35 on the closing 60-minute level. This gap down Monday, that is right now 1:39 p.m. in the afternoon, by the way, at 12/12/2011. Markets are closed. As we said, gold is a very liquid asset for people that have a gold value but may have to liquidate it because of collateral. And how did people lose their gold value? Well, a lot of times they lose it because they get margin calls in other areas of the market, and their positive gold asset ends up leaving their hands to someone else, and that's called collateral liquidation. And we've covered it, and it's very obvious that there were points that gold was down huge today in the dollar amount. And what we want to focus on, though, is how the ETF is affected with the price. That was the 60-minute level. It started over here on 12/7. This was a key area of a gap down to a very long period of a rectangular consolidation in the GLD. And then, bam. It's called a rectangular bid and ask consolidation on a 2-day level. You can't take out the high, you don't take out the low, you gap up. Classical, but the classical part of it is it closes here on 12/9. Like I said, the close was 166.35. The high was 166.83. So there are times to be selling short the GLD. Now, having said that, you can take a look that the Dow was down and everything was down across the board. S&P, NASDAQ comp, NASDAQ 100, and of course the Dow, 162.87. Look at that NASDAQ, 2612.26 closing, down 34. Here is the daily gap down, what it looks like on a daily chart. And you can see that the daily bars over here on the GLD, that this gap down was to a lower support level. We know that. Another thing we know is that the daily selling pressure in this mathematical reading here, called the moving average convergence divergence, is also in a sell signal. If you want to learn how to apply it on a short-term training basis, fine enough. When can I make money shorting gold? And why would gold be a prime target to liquidation around the world for collateral? Even governments own gold. We know that. There's lots of people that have gold. It's a positive asset. However, we see that gold could trade down as low as 1,500 an ounce, 1550, between 1,500 and 1,550 or so. If there's a liquidation, it will be validated that if you break the GLD here now at that major support level that we have drawn, that's that daily gap down, you're below all the daily moving averages up here. Oh my goodness, every one of them is being violated with this daily gap down to that support level. Now, let's take a look at something else in here. Let's take a look at where the daily GLD, what would happen to it. You can see over here where my pointer is, MMTs, this was that major support level. Now, we've come all the way back up, and we had great shorts in here on gold, but this one here, when they start with gap downs, here are gap ups in the daily, and gap ups in the daily, and gap ups in the daily. But the thing of it is, when we break this trend line, then we're going to come right down to this lower level. The 200-day simple moving average is there. Daily sell signal, GLD. Stay tuned. Learn how to use options or learn how to short the GLD outright and use the various long side and short side reversals in the GLD. There are a lot of problems around the world, and some bigger firms, if they go down, well, the thing about it is most of them own gold, and they would have to liquidate, and that would also help drive the GLD lower on the daily analysis. 12/11/2011. Correctly using the call side of the market and the put side of the market. So when the GLD loses value like this, of course the put sides is when the value is going down, the put side value gives you an entry, and then you can sell that value at a higher price when the price is falling. So let us tell you that in the very next segment with MMT's training is buying the right side of the market with these gap sequences, and where would be the next leg, and why would it drive to the 200-day simple moving average, and what strike prices do I use over here to make money, and what kind of premium do they give, and what is the open interest here. Here's 49,000 contracts right here. That's a December 160 put, and we're down here at 162, so that's a heavy side contract. 160 put and 160 call. Open interest is 19,000 there. So we can see some of the open interest both on the call side here and the put side relative to how the premiums work between the calls and puts on the GLD. info@stockmarketfunding.com. How to trade directional price movement